I am Nurfadhila and I will explain about the definition and the characteristic of accounting. What is accounting? Accounting is a mechanism of recording financial transactions related to a business. The accounting mechanism consists of summarizing, analyzing, and reporting these transactions to supervise any companies, agencies, regulators, and tax collectors. Cash flows, summarizing a company's activities, financial position, and summary of financial transactions over an accounting period are the part of financial statement that have been used in accounting. There are three types of accounting. First, financial accounting, managerial accounting, and cost accounting. Financial accounting is the particular branch of accounting that includes a process of recording, summarizing, and reporting the countless transactions that come from business activities over some time. The transactions are compiled in the document of preparation of financial statement, which are concluded balance sheet, income statement, and cash flow statement. Managerial accounting is a process of classifying, analyzing, clarifying, measuring, and connecting financial information to managers to achieve an organization's goals and targets. To help the managers and the users internal of company in deciding business decision is the objective of managerial accounting. Next is cost accounting. Cost accounting is aimed to record a company's total cost of production. It is for the intentionally for budget preparation purpose. It also assists the users internal of the company to make decisions about costing and can use the information gathered to decide how much their product should cost. Characteristic of accounting is relevance and reliability. Relevance is a concept that will give impact in the decision making of the decision maker by the information which created by an accounting system, while reliability refers to the concept whether the financial information can be confirmed and justified only with the objective proof such as bank statements. Next is understandability. It refers to the financial information that should be easily to understand and presentable to the other users of the information. The data should be clear, organized, complete, and understandable so it can be beneficial information to everyone involving for those who does not have the accounting background. Lastly is comparability and consistency. Comparability is the concept that state users of financial information such as financial reports of a business should be capable to differentiate the reports with previous year's report, while consistency is the concept that recommends the financial reports need to prepare in the same accounting principle and methods in every year. What is Islamic accounting? Islamic accounting is an accounting process that aims to provide essential information to users such as investors, creditors, business owners, stakeholders, shareholders, and others with information which will allow them to ensure that they are operating based on Sharia law. There are two characteristics of Islamic accounting. First, justice. Second, benevolence. Justice. It stated that Allah has commanded to all the Muslims to apply justice in life. Islam teaches the Muslims to be truthful and prohibited to take advantage on others. Justice must be preserved in the society so it will be organized based on the rules and regulations in Sharia law. Benevolence. It refers to good behavior or an action which advantage to others without any burden. In Islamic accounting, it refers to an organization that must acknowledge about others' needs, they need to help the others. In addition, it will make the organization more manageable as it can be accessible to meet the demands of the society. Next, we will discuss about the differences between Islamic accounting and conventional accounting. Islamic accounting is different compared to conventional accounting by law, disclosure, and entities. Islamic accounting uses Sharia law, disclosure, full disclosure in order to satisfy any requirements from users, and entities does not separate between the business and the owner. For instance, profit sharing ratio. The differences between conventional accounting and Islamic accounting is by law, disclosure, and entities. By law, conventional accounting use man-made law. Disclosure, it limited disclosure, only disclose the information that can be beneficial for public, and entity separation between the business and the owner.
Next, I'm going to explain about accounting concept in Islamic perspective. But first of all, my name is Farah Hanim binti Jamaludin. Financial accounting typically approach with the recognition, measurements, recording and presentation of financial statement components. First, recognition shows us whether there has been a critical event relating to an item or a financial transaction. Next, measurement is the sum of the item is to be listed at. Next, recording is a method of double entry bookkeeping such as debiting and crediting the accounts concerned. Furthermore, presentation is to show whether the financial statements represent the event or transaction disclosed. Basic assumptions are those principles, concepts, or practices that organizations believe to apply in preparing and presentation of financial statements. There are three basic assumptions. First, accrual is an accounting process which tracks profit and expenditure when incurred disregarding of when cash is exchanged. A selling on credit is an excellent example. When the invoice is produced, the transaction is entered into the books rather than when the cash is received. Likewise, an expense happens when the supplies are purchased or an employee has signed in for a workday, not when the check is actually returned. Going concern is an accounting guideline that implements financial statement readers to conclude that the business will survive long enough to deliver on its target and commitments. In other words, the accountants think the company is not going to liquidate in the immediate future. Periodicity assumption is an assumption of periodicity or inference of the time period states that companies can divide their activities into artificial time periods. Because consumers outside their financial statements want timely financial information, the expectation of the time spent helps us to prepare financial statements on a monthly, quarterly, and annual basis. Next, I'll be moving on to accounting concepts and Sharia requirements. Concepts in accounting are referred to differently as concept, assumption, postulate, assumption, and rules. IOFI has released a list of accounting principles to direct Islamic institutions in their accounting practice. Conventional accounting standards have been scrutinized to ensure that they are in accordance with Islamic and Sharia values. Next, I want to explain about accounting assumption. IOFI analyzed the accounting assumption of the concept of the accounting unit, going concern, periodicity, and monetary unit. Accounting unit includes the identification of economic activities associated with the IFIS, a separate entity. Thus, the concept of going concern has a major influence on the IFI. Assumptions are made about the potential continuity of the operation of the Islamic financial institution, including its investment operations. Next, the concept of periodicity means that the life of Islamic institution can be broken into reporting period for the preparation of financial reports to creditors and interested parties. Lastly, the concept of monetary units means of expressing the fundamental elements of financial statements can pose a concern about the stability of the unit of measurement in view of a change in its purchasing power. For example, a monetary unit's buying power decreases over a period of time, experiencing a rise in overall price level, which is inflation, and increases over a period of decreasing overall price level, which is deflation.
My name is Nur Nadiah, and I will continue explaining about the Islamic perspective. The first one will be accounting recognition. Accounting recognition definition describes the basic principles that decide the timing of the identification of revenue, expenses, profits, and losses in the IFI's income statement, and in addition, the basic principles that decide the timing of the identification of assets and liabilities. Assets and liabilities of financial rights and commitments are recognized or de-recognized when such conditions are met. Changes in certain rights and responsibilities are acknowledged as they result from transactions performed or other events that occur within a given time. De-recognition is the elimination of an asset that does not meet the requirements anymore. Recognition of revenue is based on the fundamental premise that profit should be acknowledged when received. Revenues are remembered on satisfying the following conditions. The first one would be the right to collect the revenue would be received by IFI. The following condition is a duty on another party to remit a fixed or determinable sum to the IFI should be imposed. The following condition is revenue figures should be known and collectible with fair degree of certainty. Recognition of expenses directly relates to receiving income that has been realized and accepted is based on the Islamic principle assigning the beneficiary of the profit responsibility for the cost. There are two categories of expenses. The first one would be expenses covering expenses which provide a benefit in the current period but which are not anticipated to provide benefits in the future. For example, management salaries, rewards, and other administrative costs. The next category is expenses that reflect an expenses to the IFI that is intended to gain several times. An example of these expenses is the depreciation of fixed assets. Gain or loss recognition depends on the completing a reciprocal or a non-reciprocal transfer which result in the benefit or loss. An example of mutual transfer is the consumption of the selling of fixed assets as the basis of profit and losses being acknowledged. An example of non-reciprocal transition is the occurrence of an incident like a natural disaster. The gains and loss are attributed, where appropriate, to unrealized gains and losses arising from the revaluations of assets and liabilities. The next one will be accounting measurement. From an Islamic point of view, the conventional concept is controversial because of its contradictions with the concept of fairness and justice. For the determination of zakat, the majority of scholars propose the use of current prices on the due date of zakat. One of the basic accounting principles is the use of historical expense for asset valuation. Current market value or cash equivalent value of commercial properties AOV FAS 9 is usually calculated by zakat for trade. AOV proposed the use of cash equivalent value to ensure reliability and comparability of the cash equivalent value. Objective metrics must be supported, rational and acceptable valuation methods must be used. Consistency in the use of valuation methods, expert assessment, and consistency in the evaluation process. And the next one will be accounting disclosure. AOF's Statement of Financial Accounting number 2 on Principles of Financial Accounting for Islamic Banks and Financial Institutions made it clear that the Islamic notion of transparency revolves around the idea of adequate disclosure. In this way, proper disclosure means that the financial statements will include all the relevant materials details to make them useful to users. Appropriate explanations and clarifications are therefore needed to make the information given useful to users, and appropriate additional notes are required.
Hi and Assalamualaikum. My name is Nur Atiqah Najwa and I will explain to you guys about the AAOIP. What is AAOIP? AAOIP is Accounting and Auditing Organization for Islamic Financial Institutions that established in 1999 and based in Bahrain. AAOIP is an independent industry body which is a non-profit organization established to preserve and promote Sharia standards. AOIP has issued 100 standards in the areas that covered by Sharia, accounting, auditing, ethics, and governance for international Islamic finance. Besides that, it is supported by some of member institutions, including the central bank and the regulatory authorities, financial institutions, accounting, auditing, and law firms from over 45 countries. The mission of AOIP is to protect and enhance the integrity of the global Islamic banking and finance industry for the vision, standardization and harmonization of the international Islamic finance, practice and financial reporting in accordance to Sharia. The standard development, it has 5 disciplines are covered: Sharia, accounting, auditing, governance, and ethics. For the Sharia board, it is technical board responsible for issuing, reviewing, and updating the Sharia standard. The standards are widely applied globally because it represents the main reference and authority for the Islamic finance industry worldwide. In Sharia board, they have 60 standards issued, including guideline, research, interpretation, and other related scientific and professional products that cover 33 standards issued based on accounting and auditing. Meanwhile, for the Accounting and Auditing Board, it's a technical board responsible for issuing, reviewing the accounting standard and all related materials. At the same time, Governance and Ethics Board had 10 standards issued. It is technical board which shall be responsible to carry out development and a review of governance standards and code of ethics and all related materials, including guideline, research, and interpretation. The second area of work that covered by AOIP is professional development and training. In this area, they have 2 professional qualifications are offered. Firstly is Certificate Islamic Professional Accountant. For this certificate, they need to have accountancy qualification, and secondly is Certificate Sharia Advisor and Auditor. They have 30 exam centers in 20 countries around the world, such as Bahrain, UAE, KSA, Qatar, Kuwait, Lebanon, Jordan, Syria, Turkey, Pakistan, Malaysia, South Africa, Mauritania, Sweden, Egypt, Libya, Tunisia, Morocco, Algeria, UK, and Indonesia. The objective of IFE are to develop accounting and auditing thought relevant to Islamic financial institutions, taking into consideration the international standard and practice which comply with Islamic Sharia rules. Secondly, the objective that IFE need to follow is to spread accounting and auditing thought relevant to Islamic financial institutions and its applicant to seminar, training, publication, and periodical bulletin, carrying out and commissioning of research, and other. Thirdly, IFE has the following objective, which is reconcile, improve the accounting policies and procedures that have been adopted by the Islamic financial institution to the preparation and issuance of accounting standards and the clarification of the same to the said institutions. At the same time, IFE need to promote to this institution of good ethical practice relating to Islamic financial institution to the preparation and issuance of codes. Fourthly, IFE need to achieve similarity among the Sharia supervisory boards of Islamic financial institution in concept and application to avoid conflict and disagreement between the fatwas and the application by this institution. With a view to activate the role of Sharia supervisory boards of Islamic financial institution and central bank to the preparation, issuance and interpretation of Sharia standard and Sharia rule for investment, financing and insurance. Fifthly, the objective of IFE is to assess the concerned regulatory bodies in order to implement the standard, as well as the statement and guidelines that are published by IFE in Islamic financial institutions and other financial institutions that offer Islamic financial services and accounting and auditing firms. AAIFE offers educational and training programs, including professional development programs on auditing, accounting, governance, ethics, Sharia, and other related areas. Also in order to promote knowledge and to encourage greater professionalism in Islamic banking and finance. Accounting and auditing organization for Islamic financial institutions need to carry out other activities, including certification of compliance of IFE standard in order to gain wider awareness and acceptance of IFE standards. Altogether, IFE carries out all these objectives in harmony with the perspective of Islamic Sharia for all aspects of life, in conformity with the environment in which Islamic financial institutions have developed.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti Asmahan binti Azali. I am honored to share about the MASB FRSI 1 as of 2010 MASB TRI 3. MASB is a Malaysian Accounting Standards Board. It was established as a standard setting body of Financial Reporting Foundation (FRF) that functioning as determine and issue the accounting standards when preparing for financial statement. It was established under the Financial Reporting Act 1997. The board withdrew the FRSI 1 and issued the Technical Release I3 because most of the components already available in the FRS 101. So to avoid duplication of the guidance, it was withdrawn. Thus, any additional guidance that is not available will be provided in the Technical Release I3. The FRS 1 was only effective to 2010 and then replaced by the Technical Release 3. There are many functions and some of them are develop a conceptual framework for the purpose of evaluating purpose accounting standards. Second, to review, revise or adopt as approved accounting standards existing accounting standard, and last one, to issue new accounting standards as approved accounting standard. Meanwhile, the mission is to develop and promote high-quality standards of accounting, financial reporting, and technical release for Islamic financial institutions that will be beneficial to the users, public auditors, and preparers in Malaysia. In order for the MASB to achieve their mission, few policies objectives were set up as the guidance. The MASB consists of 8 members that were appointed by the Minister of Finance. It consists the chairman, the accountant general, and another 6 members that have knowledge in the related field. 3 advisors for MASB are Bank Negara Malaysia, Securities Commission Malaysia, and the register of companies that were appointed by the Minister of Finance. The objective of technical release is to set the basis for the presentation and disclosure of financial statement amongst Islamic financial institutions that running the Islamic banking activities. It is also provide guidelines for the basis of the content of financial statement to ensure it is follow the Sharia principle. The scope of MASB is applied to first, conventional financial institutions that apply Islamic banking scheme. Second, other institutions are encouraged to apply, and third, Islamic financial institutions. Policies needed when there is no specific requirement for the financial statement are must relevant to the decision making of the needs of the users and must reliable in terms of neutral, prudent, complete and faithfully. The MASB Technical Release I3 required components in the financial statements are changes in equity other than arising from capital transactions, explanatory notes, income statement, cash flow statement, or changes in equity, accounting policies, balance sheets, and also appendix. Next, the statement of financial position according to the MASB Technical Release I3. Firstly, the statement of financial position must include the Islamic financial institution asset, liabilities, and equity. This can be explained with first, liabilities usually comprise deposit from customer, bills payable, investments of other financial institution and other liabilities, and also asset is include cash balance and short-term funds. Next, it must include the residual interest in the assets after deducting all liabilities is known as equity of the Islamic financial institution, and also fund allocated is disclosed as a separate liabilities for conventional banks and other financial institutions that participate in the Islamic banking scheme. Must also include in the statement of financial position is the separate disclosure of assets, liabilities, and equity is presented in the note. So first, to differentiate, it is usually made between asset types and value of the assets in the note and useful to the decision maker. It is useful to users because of the special characteristic and connected risk of each type of contract, and also other liabilities is including payables of istisna, salam, dividend, zakat, and tax. Next, we move on to the statement of comprehensive income. Firstly, the descriptions and the ordering item need to present all information that necessary. Second, income of Islamic financial institution is derived from investment of depositors' fund, investment of shareholders' fund, and attributed to the shareholders. And the third one, the expenses of an Islamic financial institution usually consist of allowance for loan and financing, expenses that are directly referable to the investment of the depositors and other expenditure. Lastly, the statement of changes in equity. For statement in changes in equity, first, it must present the amount of dividends that is identified as distribution to owner. Second, the descriptions and the ordering item needs to present all information that necessary. And last one, for conventional bank and financial institutions that operate Islamic banking activity does not need to disclose the dividend per share. Following are the disclosure of Islamic financial institution that needs to be disclosed.